Hey. Welcome. Hey. Welcome. It is Tax Tea Thursday with Tish. I am back live. Last week I was sick, so I didn't do a live last week. I'm honestly still kind of sick, but I'm pushing through. I had some turning events happening, and I was just really in a slump. Hey, bestie, it is Tax Tea Thursday with Tish. How's everybody's week been going so far? Go ahead and share this in any groups that you are in, because tonight we are discussing a little sprinkle of fraud, because that is really the topic of discussion every year, honestly, but this year I just feel like it is crazy. Hey, it's Tax Tea Thursday with Tish. I know you're probably gonna hear me clear my voice a lot on this live, but yes, my voice is coming back. Last week I was really under the weather. I still kind of feel under the weather, but I'm getting back to myself, right? So yeah, I heard in these tax streets that you all like to sprinkle a little fraud in those tax returns. That's just what I heard. That's what the people saying, baby. My ears to the streets, baby. And that's what it's saying. That's what they talking about. So I'm not going to keep you all for long because I have some returns to do. If you have not filed your tax returns as of this moment, please go ahead and do so. March 15th is approaching. So what's that? S Corps and partnerships are due March 15th. Yeah, I love an S Corp, but we ain't going to talk about this tonight. We will not talk about this tonight. Hey Sierra, hey Terry, thanks for joining. As you can see, the title of this live, you all like to sprinkle a little fraud in that tax return. Okay, let's talk about it. Everybody love a little fraud, right? Until you get caught. So of course tonight, Tax Tea Thursday with Tish, we're going to be talking about something that I feel that a lot of people are guilty of, which is sprinkling a little fraud on that tax return, like it's seasoning, like it's that lemon pepper crack seasoning, right? I've actually lost a few clients due to not sprinkling a little fraud on the tax return, but that's just not what we do here at LC Financial Solution. I am a tax and wealth advisor, and I want you to get your money back legally. I want you to maximize your wealth legally, okay, and minimize those taxes legally. That is what I want you to do, right? Legally. So, I mean, hey, I've lost a lot of clients that looks for that looks for a little sprinkle that slap your mama in that tax return. Yes, the lemon pepper seasoning, Sierra. That's how they want us to sprinkle right there fraud in, right? Give me some extra. That's what they want. And as much as it sounds good, I am not the tax and wealth professional that does that. So again, sprinkling, a little extra fraud on your tax return is definitely not good, because you don't want the IRS coming knocking at your door, and they will pull up with the suit tie, the little badge they got and everything, right, knocking on your door. And then the first thing you want to say is, I don't know what they put on my tax return. Like, girl, you asked me to put this on her. Like, why you lying on me? We both gotta go to jail. I lost 5 clients in one day due to that. Yeah, I'll probably say like last year, I probably had about 5 to 10 people hit me up about the sauce, right? That's what they calling it, the sauce. They want the sauce. And I mean that's fine. It's really not my target audience. So um shout out to the people who is their target audience because they are definitely making a bag. And one thing about the IRS, they'll let you do fraud. They'll let you say you got $32,000 on your tax return. They sure will. They will let you say that and let you go cash that check. No, the sauce is really jail. And the crazy part about it is, right, as a tax professional, as we sprinkle this fraud on your tax return, 9 times out of 10, you won't go to jail. Your tax professional will, right? And typically, the only way I would say you can really go to jail, like if you are audited, it would have to basically go into like a criminal investigation. Typically, for a tax preparer or no, a tax payer, if you do fraud on your own tax return, you'll normally just get an audit, and then you have to go through that process. Um, but the kicker is a lot of these tax professionals that do fraud, they doing your tax return on Free Tax USA. Like, be for real. And at the bottom of your tax return of page 11040, it's gonna say self-prepared. It's not gonna have that tax preparer name nowhere in sight, right? So, tonight, like I said, we'll be talking about sprinkling a little fraud into the tax returns on Tax Tea with Tish. I want us to come tonight and drop some entertaining news for you all. Yes, self prepare, right? And then now your tax professional not picking up the phone. Baby, they change their number every season. If your tax preparer changes her number every season, what that's telling you, okay? Or he, because it is male tax professionals out here too that sauced up, right? And they doing fraud as well. So tonight I want to talk about the dirty dozen. So for you all who do not know, basically the dirty dozen. Did I say that right? Dirty dozen. There we go. Okay. The dirty dozen list is basically 12 tax scams that the IRS puts out each year, right? So every year it's a new list of tax scams that's going around. So they are cracking down on it. And let me tell you, some of you people are playing Russian roulette when it comes to these tax strategies that you saw on TikTok. You're trying to write off your BBL, you're trying to write off your breasts, you're trying to just write off everything. Oh, I heard I can take my family on a vacation and write it off on my taxes. Okay, do it and let me see how that work out for you, right? Because again, the IRS will let you commit the fraud, right? The IRS will say, okay, yeah, you said that you got a tax refund of $32,000. Yeah, go ahead, let you cash that check. As soon as you got $2 left out of that $32,000, here come the letter, right? Now you didn't spend your money on um what y'all like to drink, do say. And Julio, right? And now you don't got no money to pay the 32,000. Yes, here the BBL. I've had people come to me and say, "Oh, I heard I can write off my BBL." Okay, is it an ordinary and necessary expense, right? Now, if you probably do OnlyFans and you got a business out of it, you may be able to get away, right? Yes, like I said, they'll let you cash that check of that $30,000, and now when the audit come, now you acting like you don't know what happened. You saying your tax professional, you don't know what they put on there. You just signed it, girl. Please, you wanted me to add that BBL on there, right? So the first topic that we're going to talk about, or I should say number one, yes, Deja, the BBL. So number one, we're going to talk about the fake dependence in income, right? So claiming your cousin's baby as your own is not a wealth building strategy, okay? The IRS definitely has ways of checking, especially when it comes to a social security number, and especially if that dependent is being passed around each year. Every year, somebody else claiming a baby. Like, come on now, be for real. So claiming dependents that are not yours, even oh, excuse me, even stepkids. Like when you claim your stepkids, you're technically supposed to be married, not just like a girlfriend boyfriend situation. To claim the stepkids, right? You actually need to be married, and when you are married, you need to file a married filing jointly return or a married filing separately return. I've lost a couple of clients like that as well because they try to file head of household even though they are married. The only way you can file head of household and be married is if you and your spouse have been separated for more than 6 months out of the year. And honestly, I want to see proof. Like you say you separated, but did you go to the court and get actual separation papers so you can prove that you had a household? Because just using a different address is just really not going to cut it. So a lot of times people do, if you marry filing jointly, you really should be filing married filing jointly or married filing separately, unless you all are actually separated, and then you can claim head of household. But you just can't claim head of household because you don't want to file with your spouse. Like it just doesn't make sense. Yeah, I can't believe how common that is. Either Deja, I probably say like maybe 2 to 3 clients I've spoken with over the years, that wanted to file head of household, and I'm like, I know that you're married, so we can't do this, right? You need to either do a married filing separately or a married filing jointly. So again, number one of the dirty dozen of fake dependence and income. You won't believe people will come to us with fake W-2s, with all of those numbers. And honestly, as a tax professional, we're not fraud analysis. So we really don't have to verify or basically say, okay, yeah, this is a real tax document. Like once you submit it to me now, if I see everything gets like zero, or if it say like your W-2 in box one you made 25,000, it's just 25,000 even. Like if all your numbers are even, there are ways to see within your W2 if I can see like, okay, yeah, this may not be real, this may be fake, right? But there are people who will, there are groups out there on Facebook where they are creating fake check stubs, fake whatever you need to get whatever you need, right? And that is not what we want to do. Um, so yeah, no fake dependents, no fake income, right? Moving on to number two of the Dirty Dozens list, false business deductions, right? So a lot of us are becoming business owners, which I mean is in this day and age is becoming normal. If you own a business but you can't explain what you sell and what you do to the IRS, and why you write off those Gucci shoes and that Miami trip as a business expense, then you have an issue, right? So even though you do have a business and you write off things, you need to make sure that they are ordinary and necessary, right? And also have your receipt so you can back it up and say, yeah, I spent this on that, and here's my receipt for it, right? So that's why here at LC Financial Solutions, when you say that you have a business, or you got some itemized deductions, I want to see the receipt. So just in case of an audit, we are already ready, right? We want to stay ready so we don't have to get ready, right? And again, you don't want to write off false deductions to lower your taxable income. So just because you have $5,000 in expenses doesn't mean that when you write off the 5,000, that doesn't mean it's going to take 5,000 away, right? I had to explain that to the client because they thought if they had a credit card and they spent $25,000 on that credit card and they write off 25,000, they're going to get $25,000 back as a refund. It doesn't work like that, right? It's up to 80% of your qualified business income. And if your business has a loss, then you have to do a carryover. Hey, Shanta, we are talking about the dirty dozen because people like to sprinkle a little fraud on their taxes, right? So yeah, those false business deductions, you definitely want to stay away from that. Again, here at LC Financial Solutions, I like to have receipts because why not? I've worked with tax attorneys, partnered with tax attorneys. I've done dozens of audits, on the tax professional side and tax preparer side, and they want to see those receipts. And then if you can't provide those receipts, guess what? They're going to disallow it. So that means your tax return will initially change and your taxable income could increase, right? which is not a good thing. Moving on to number three, PPP and the ERC fraud. So some of you thought, of course, that was free money. Newsflash: the IRS is still arresting people over the fake PPP loans that they have taken out over the years when that was, right? I know a lot of people say, oh yeah, that PPP list was long. I don't know about y'all. I'm in the tax industry. So me personally, I love looking up like audits and compliance. Like that's really my thing. I really love diving deep. And that PPP list was so long of a lot of bull crap and fake businesses, and it's crazy. So you may think that you might got away with it. They might have say they cancel it, but the IRS, what you don't understand is if you do fraud on your tax return, the IRS basically has an unlimited amount of years to go back on that tax return and then ask you to provide all of those income, expenses, any statements that they need. Right? I know it was a lot of third party people doing the PPPs, but it's no good, right? We want to stay away from that. And the ERC as well. A lot of people was doing that. They coming back for that ERC. So if you basically said like you had employees and you were trying to write off some stuff, yeah, they spinning the block. One thing about the IRS, they will spin the block, baby. They good for spinning the block. That's what they need to be called, spinning the block, because baby, they gonna turn around on you real quick. Something else that's on the Dirty Dozens list for fraud is ghost tax preparers. We talk about this a lot. Ghost tax preparers, right? So if you are a tax professional, right, or if you have a tax professional, or they only accept cash, or they don't sign the return, or they don't go over the return with you, they just be like, "Yeah, you got back $17,000," and you so excited, right? And you just signing away, and then next thing you know, here comes the audit, and you look at your tax return, and the first page you see is Free Tax USA. So, if for people who don't know, Free Tax USA is basically a website to where you can do your taxes for free. I've never used it personally, but I've had clients who use that before with a ghost preparer, and it's been crazy. I've had a ghost preparer put like 3 Schedule Cs on one of my clients' returns, and they end up being audited. It end up turning criminal, and they wanted to start seeing receipts and things that they were trying to fight off. And when they was trying to call their tax professional who did their tax return, guess what? Wasn't picking up, wasn't answering. Phone got disconnected. Right. So when you are getting your taxes done, you want to be able to look at, make sure that their name is on there too, right? You don't want to just see your name, because it's like, okay, now you're responsible for what's on that tax return, not that tax professional that got you back 17,000 and charged you 7,000, right? Something else that is on the Dirty Dozen list is the social media tax myth, right? TikTok and Instagram. Some of you all are believing that you can write off, like I said, designer bags, vacations, the BBLs. Like, oh, I can write off my Gucci bag. Like, girl, no, you cannot, right? And then the thing about the social media, and when it comes to these tax professionals or strategists, wealth strategists, whatever they want to call themselves, a lot of times they don't even really go into detail, about it. Oh, did you know that you can write off your vacation and take your family on a vacation? And then now you haven't even read the rest of maybe what was in the details, or maybe you didn't even really see the entire clip. Now you come to me and saying, "Oh, on TikTok they said I can write off my vacation." Like, no, you can't, right? I mean, but you can if you have a business with your family, right? But again, you want to consult with your tax consultant on that to make sure that you can write that off. Moving along, the fake charities. Yeah, I ain't even gonna get into too much into it because I saw some tea, right? Tax tea. I love tax tea. So recently in the area, it was a couple arrested. I'm not gonna put their business out there. I mean, but it is on the internet, right? So it's already out. But anyway, it was a couple who had a fake charity, right? So the charity was actually real, but the money that they was getting from the charity, they were actually spending it, right? It was millions of dollars. Like, ooh, it was fraud, embezzlement, child. It was crazy. So stay away from the fake charities because again, you do have those tax professionals that say we can get you back the max, and then when they are getting you back the max, they are typically doing something that they should not be doing. So bogus charities, like I said, they can intensify whenever you are in a crisis, or any natural disaster strikes. Scammers set up these fake organizations to take advantage of, the public's generosity because, again, you can set up a charity and people will donate thinking it's for a cause and you really spending the money yourself. Or maybe, you just don't even have the charity set up. They just put it on the tax return and made up some numbers, right? So, taxpayers who give money or goods, to a charity may be able to claim those deductions if you actually have a charity, right? So that's the only time you want to use one, but you don't want to create a fake charity and say, yeah, I give food out to the homeless and X, Y, and Z, and I spent $10,000 to $20,000, and you didn't. But yeah, that tax on that fake charity, it was crazy. Which is really not even a fake charity, or I would say a nonprofit. It was actually a real. Well, I'm not gonna say it was a real nonprofit because at this point, baby, I don't know what's real and what's fake. But I mean, supposedly it was a real nonprofit, right? And they were taking the money that they were receiving from different organizations and different grants that they have won. They were doing some work in the community with some of the money, right? But most of the money went back into their pockets. And it was crazy because when I was reading it, the charity or nonprofit, like I said, was feeding the homeless, but the husband was the catering business, right? So the husband had the catering business. So the wife was paying the husband, right? But again, it was crazy. That was too much detail. And that's too much tea for this one, right? That's a whole different type of conversation in life. I would have to get on with that. By the way, if you all want me to start talking about different tax cases that's actually going on in the real world, I've definitely been thinking about doing that as well. So I'm just dropping some tax tea, so you can know what's going on in your area or even nationwide. I do have details about different tax cases that are already on a website. So this is nothing that I won't be talking about. These are not my clients. These are not clients that I've partnered with or anything, but Department of Justice, they always have basically like a website subscription that you can sign up for, and it tells you about all type of tax fraud, embezzlement, and things like that. So if y'all want that, so go ahead and drop that in the chat too, because I can have some Tax Tea Thursday where I'm just talking about different tax cases and how they have defrauded the IRS, right? Another dirty dozen that you want to stay away from is the false fuel tax credit. Now, this one was real big, and honestly, I still think it's big now, where people are writing off additional fuel for their business. Excuse me. But when using the fuel credit, you can only use it for all highway businesses, right? So you can't, even though you may be a trucker or some type of driver transportation company, you cannot use that certain fuel credit that people are using to get back, five to six, $7,000, right? Um, Again, social media, when you are listening to people on social media, make sure they are diving into detail, and then don't just take what they say and then take it to your tax professional. Make sure you do your own research as well. Google is free, right? Everybody can use Google. But when using that fuel credit and you trying to claim, these deductions that's technically that you can't claim, and then again, when you are due for an audit and you can't provide that information, you're going to get a fine. So you want to stay away from that. Another credit that was big that I've seen in some audits recently that they've actually gone back on for 2020 and 2021 was the credit for sick leave and family leave, right? So, of course, during COVID, this credit basically is available for self-employed individuals for 2020 and 2021 during the pandemic. The credit was not available for later years, and this credit was basically saying like, oh, my business lost money because of COVID, right? But a lot of times, on that tax return or on that, I will say, form for the family sick leave, 7202, it asks you questions about like how many people worked in a business, how many days did you not work because of COVID, and people were basically lying on that too, sprinkling, a little fraud on that too, and say, oh, I lost 30 days, I lost 60 days. And then they would get, of course, a credit for that, right? To increase their refund. But yeah, the IRS still spinning a block on that. So that's another dirty dozen that you want to stay away from. And then if you do have that credit on there, and they spend a block on you, definitely reach out to us because we'll be able to assist, right? So again, in reality, when it comes to social media and your favorite people that you like to follow, make sure that you do your own research on things that they send that you can write off, and make sure it actually applies to you. Like, how do you think you can write off a vacation if you don't have a business, right? Or don't just create a business in that year to just write off things so you can have a lower taxable liability, especially for my high income earners. If you know that you have made 80,000, 100,000, even $120,000 for the year, and you only took out 5,000 for federal taxes, yes, you're gonna owe. But that doesn't mean create a fake Schedule C or a fake business, right? To actually lower that taxable income. You don't want to do that. Another dirty dozen is overstating withholding scam. So this is the most recent scam circulating around on social media. Encourage people to fill out the W-2 and tax statement, or other forms like a 1099 NEC or any other 1099s with false information. And like I said, you can create like fake check stubs and fake W-2s and things like that to say, okay, I had more withheld than I typically would. I'm in a couple tax groups, and somebody has said that somebody put on their taxes they withheld $54,000. Ain't no way. Ain't no way. And so now the IRS is coming back, right? And they saying, okay, well, you said you withheld $54,000. Where? Because federal is going to the IRS, right? On box two, on that W-2, federal withheld is going to the IRS. So it's like, hey, you said that you reported $54,000 that withheld, but we don't have $54,000. So now can you prove? And guess what? Now you can't prove it. Now you got a return or a refund of $30,000, $40,000 because you said you had $54,000 withheld. No, it dang on well. You ain't had no $54,000 withheld, right? Again, people can do that on a W-2. People coming in with the fake 1099s just to get money back. And it really kills me, especially when you haven't even put that money in. Like, that's the whole point of a refund. The refund is to get kind of like what you put in, right? And also it's to help the citizens who really don't make a lot, right? So those child tax credits, additional child tax credits, right? Those were to help lower income families um obtain, a bigger refund, right? To help them out. So you have to make it make sense. Like, you can't say, okay, yeah, I want $20,000. Well, not even 20, but 10 to 12 or even $7,000 back, right? You have to make your tax return make sense, especially if you get government assistance, because you don't want to say on this tax return that you made $75,000 and then now you got all these write offs. And then now the government is like, wait, you said you made $75,000, but when you reported to get your assistance from us, you said you only made $25,000, right? So something not adding up. So you have to make it make sense all the way around the board, right? You don't want to, again, just get the refund because you feel like it's tax season and this is what you are owed, right? You don't want to do that at all. That is a no, no. Another dirty dozen that I will discuss is misleading offers and compromises. So basically, offer and compromise is a program that it helps people settle their federal tax debt, right? So I do help clients with this as well. This is a service that I offer, which I typically promote it as tax debt resolution. If you are in tax debt and you owe over $50,000 or more, I'll definitely be able to assist you with that. But when you do an offer and compromise, it's basically saying like, okay, I can pay you something, but I can't pay you everything, right? And so when you saying, okay, if I owe $30,000, I can't pay you 30, but I can probably pay you 10. But in order to even get approved to only pay 10, you have to submit financial documents, right? And then we have to go through those financial documents, and list it out and then send it to the IRS. But sometimes people like to leave documents out all the time. And when you leave those documents out, you're basically misleading the money that you have. You are trying to hide money, and that is something that you don't want to do. Like, we don't want you hiding money. As a tax professional, when you are completing these intake forms, right? We need to know every dollar that you made. Like, where did it come from, right? I've really been dealing with clients who's leaving off information on the tax return, and then, or not even on the tax return, but on the intake form, right? I have clients that are leaving things off, and then it's like when I'm reviewing your last year tax return, I'm like, wait, you said you had rental income, but you didn't include that on your intake form. Do you still have rental income? Oh yes, I forgot to add it. And then you send it, and then you made $50,000 for the year. How you forget to add that? Like, be for real, right? And then now the price that I quoted you is technically not even the same because you didn't left off income. You will be surprised of how many people leave off income. Like, I literally have to ask them like every single question on any type of money, and they will say no, and then again they'll come back and say, oh yeah, I did, I forgot, I had a partnership. Like, you knew you had a partnership when we was talking, you just didn't want to add that money, right? So yeah, that is the dirty dozen for tonight. Like I said, misleading money, or not actually saying that you have all the funds that you have, or even overstating funds, right? That can definitely cost you. You don't want to overstate your funds. Bogus self-employed credits, they are good for making sure you see all the expenses but leave off. Yes, they will. You are right. You are right, Dr. Gazette. They will leave off plenty of expenses, plenty of other income, everything, right? But when it comes to saying, oh, okay, did you have a rental property? Did you have gambling winnings? Did you got crypto? Do you have, do you have any other income that you besides what you submitted on this tax form? And then they'll say, oh no, I don't have any other income. And then when I review your last year tax returns, right? Because here at LC Financial Solutions, I want to see your previous year tax return or the latest tax return that you filed, so I can go back, compare and contrast of what you submitted to me versus your last tax return. I've had clients leave off rental income. I have clients leave off partnerships, and I'm like, wait, you got a partnership? Oh yeah, I do. Let me email that over to you. Like, you know, you had a partnership, right? You want to leave off the income. You want to leave off the income, but you want to make sure that you write off every type of expense that you can. We need that. And leaving off income is still fraud as well. You can't say, oh, yeah, I had a business, but I didn't really keep track of everything. So I just don't want to write the business this year. I don't want to claim the business this year. That's not how that works. If you made money, you need to claim it. Especially if you or a Schedule C, right? You want to be able to claim that money because, again, if you have an LLC, guess what? You register your LLC, right, to your Secretary of State. There is a paper trail always in the background. That's why when I deal with my clients, I need every receipt, every document, all type of proof. We want to stay away of not having proof. So just in case of an audit, because just because you may get audited, it doesn't necessarily mean that you did something wrong or your tax professional did something wrong. They just want to make sure that what you said is what you said and it was accurate. So if I already have all of these documents and you get the letter saying, hey, you're being audited, right? And we want to see the proof. Guess what? All you got to do is send me the letter. Hey, the IRS sent me this. Okay, don't worry about it. I'll send everything off, right? So now you don't have nothing to worry about, but you have to start worrying once you submit this tax return and then your tax professional or even yourself, you don't have your documents in order. Now you're trying to scramble. Now you're rushing. No, that's not what we're going to do here, right? We don't want you all sprinkling fraud into the tax return because 9 times out of 10, when you're trying to get fraud or the sauce, as people like to call it, it's money that you not even supposed to be getting. So I just don't understand why a lot of people want to defraud the IRS. Like, and it has your name on it. Like, it's a paper trail, babes. It's a paper trail. We don't want that at all. You want to be able to stay clear of fraud. And then even if you're dealing with a tax professional, like some of them will be like, oh, if you tell your tax professional, I just want the max, baby, they gonna put it on there. Again, guess what? They're gonna have you sign that tax return. They're gonna call you, okay, girl, I got you back 8,000. I'm charging you. I'm charging you 1,000, and you ain't budged a bit about that 1,000 because they getting you $8,000 back that you shouldn't be getting in the first place. Come on now, y'all love a little sprinkle of fraud. I don't know why, especially with the IRS. Why you want to do fraud with a paper trail, right? So again, when you are doing fraud, um, as a tax professional or as a taxpayer, there are consequences of that. You will get penalties and fees for everything that's on that tax return. You can get an audit. And in this day and age, baby, audits is they sending them papers out like they were sending out them stimulus checks y'all was getting. You can lose future refunds if you are doing fraud. So if you claim dependents that you shouldn't be claiming, you can lose the ability to claim those dependents in the future. So there are consequences and repercussions, even for, again, the taxpayer. You may not go to jail depending on what the fee is, and depending on how much you may owe. You may just get a fine, but you can still lose claiming some of those credits in the near future, which you don't want to do. So again, I know y'all love a little sprinkle, sprinkle, but again, stay away from the fraud. Stay away from PPPs, fake business deductions, overstating income, the fake dependents or dependents that's not really yours. Stay away from that. Stay away from the fake Schedule C's just because you want to write off, just because you want to do some write-offs because you made a lot of money in your W-2 job. So now that you made your 90,000 for the year and now you owe $2,000, you don't want to pay. So now you like, oh, what can I do to not owe? You know what? You need tax planning. That's what you need. You need tax planning. If you know that you making 80 plus $1,000 single, no dependents, no business, you need tax planning. And you need tax planning throughout the year, not when it's tax season. You can't come to me today and owe $5,000 and you wondering what you can do to get that down. You need tax planning. You're gonna have to pay. Now, granted, you may have some itemized deductions, maybe like a health savings account that you can still contribute to, until April 15th. There might be something like that, or you may have had some medical expenses or mortgage interest that can help deduct, the amount that you owe, but you need tax planning throughout the year. And not every tax professional or tax business offers tax planning, but we do. We do specialize in everything tax. So, as far as tax preparation for your business, for your personal needs, um, tax audits, tax planning, tax debt resolution. As you can see, my banner back here that I have up so my clients can see when they come into the office, like I do it all when it comes to taxes. But again, stay away from sprinkling the fraud on your tax return. We don't want to see it, right? We want to be able to maximize your wealth legally and minimize your taxes legally. That is what we want to do. If you want to see more of your money, earn it correctly. If you want to see more of your money, invest in tax planning strategies that can help you see more of your money, because you can't expect to go exempt all year and then when it's time to file taxes you're like damn, I owe. How can I not owe? Okay, take that exempt off first. That's the first step, right? Go in and change that W-4. That's the first step. And then we need some tax planning strategies, because if you continue to go exempt, and technically if you owe previous year taxes, you're not supposed to go exempt. It's on the W-4 that you probably pass up when you're reading because you're trying to go to exempt and you just making sure that you click the check to go exempt. But again, that's a whole different topic. I've been on here for 40 minutes. Thank you all for tuning in to Tax Tea with Tish. Go ahead and share this live with somebody, tag somebody, Again, we've talked about sprinkling a little fraud on your taxes. We know y'all like it, like the lemon pepper seasoning, but we're not doing that this year. We want to maximize your wealth. If you want more money legally, find a way to get it, right? But don't wait until tax season to try to get it because, again, like I said, the IRS will let you cash that $32,000 check. And when you got $2 left, here come the audit. Now you don't know what to do, right? So you want to stay away from that. Again, thank you all for joining Tax Tea Thursday with Tish. I need to give me some audio music or something for that. Give me a little theme song going on. But yeah, like I said, thank you all for joining. If you all want me to start talking about actual tax like news with different cases and things, let me know. I might do one next week, depending on if I can find some juicy details. About somebody doing some tax fraud or some tax embezzlement. I'll be able to see. Oh, I think I got a couple of stories already for people who committed tax fraud in the area and in different states as well. But again, share this live. If you all need to book an appointment or schedule even a consultation just to figure out, your tax planning and budgeting or anything like that, please click the link in my bio. You can go to LC Financial Solutions, my business page, LC Financial Solutions, to book a call. You can search me up, Letitia Wilson, on Facebook. My page is public, so you'll be able to contact me on there and my website. Thank you all for joining. I have some taxes to do. Good night.